Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw a continuation of the strong upside move that started yesterday. And at this point, heading into the open, we know that the buy side is in control and is dominant. And the main thing that we are going to be watching for is to make sure that there aren't any signs of a failure this morning. So keep an eye on the other markets. The S&P has been leading on the way up, and in the short term, ES is stronger than the other markets. So that means you want to be a bit more careful shorting the S&P. And at the same time, as long as we're not seeing an all-out failure and rejection in the Russell and the NQ, then there's still potential for the S&P to head higher. So if you're watching these other markets, TF and NQ, and TF, keep an eye on the 1160 high volume node, and in NASDAQ, keep an eye out at the 4590 to 4600 area, roughly. And as long as these other markets can break out above those zones, then there is still potential for more upside in the S&P as well. In the event that these other markets just completely reject and fail, that could limit the upside in ES as well, and we could get a pullback. So right now we know that we've seen a very strong reversal yesterday, and again the question is there enough momentum and buying left in the market to continue going higher and take ES to the upper resistance zones? So in the event that buying continues and we continue to see upside momentum and there aren't any major warning signs in the other markets, then on the upside, ES can quite easily go up to 64 quarter to 66 quarter and even fill the gap at 69 and test 70 to 72 half. So on the upside, the 70 to 72 half area and possibly even 74 quarter naked VPOC, those are all potential upside objectives that can actually get hit. The 70 to 72 half area is a spot where responsive sellers can be more active, and as we go up there, that is an area that can limit the upside and cap the upside on the day. But again, it's going to depend on how it approaches that zone. But from a location perspective, the 70, 72 half and the 74 quarter are better spots for the sell side to step in. And as we go higher into resistance, we can get more aggressive sellers stepping in the market. So it will be a good idea in the event that you're long to certainly look to take profit into that zone. But at the same time, it could also present a short setup on first test. The 64 quarter to 66 quarter is a zone that we still want to be careful at, and unless we're getting a signal in real time, either via a very notable negative divergence or just a pure lack of momentum or downside momentum, we'll want to be careful shorting 64 quarter, 66 quarter, because like I said, we have that open gap right above, and 70 72 half is an area that can get hit. On the downside, our primary support heading into the open is 45 half to 48. As long as ES is holding above that zone, we know that there's still potential for the buy side to retain control and for the market to just balance and continue going higher. Ideally, you don't want to see a pullback to 45 half to 48 if the market is setting up for a move up to the initial resistance zone and the 70 to 72 half area. But 45 half to 48 is valid support until broken. A break below 45 half to 48 would mark a failed breakout attempt from the overnight session. It doesn't mean that the entire market or the entire day has to be purely bearish, but it will signal a lack of strength, and that can bring the 36 to 38 zone and the 28 to 30 half zone into play. 36-38 is an area where it's still better to exercise some caution and be aware of the real-time momentum situation as the market's heading into that zone. As long as the market is a bit exhausted and we're not seeing severe downside momentum and broad market selling, 36-38 is a zone that can still be traded. 28 to 30 half and 24 to 25 are very decent areas of support. Those are stronger areas of support, and it's unlikely that the market will just slice through it. So at the very minimum, 28 to 30 half and 24.25 are areas where we can expect a reaction. And those can even be areas where the downside gets capped and the buy side steps in, and then again we start balancing in a range. And it should go without saying, but trading that zone is in the scenario that we're not seeing excessive weakness in the market, and that it's not a complete failure and a reversal or trend down type environment, which is not the expectation, but just to be aware of the possibility and just make sure that we're not fading zones in the wrong context. So the primary game plan heading into the open is going to be to look for continued strength across the other markets and focus more on long side as opposed to short side. But in the event that we get a clear-cut failure in the other markets, because they are lagging behind the S&P, so in the event that we get a clear-cut failure, we could get a short setup on the day time frame as well, especially if the other markets continue to lag, but the S&P goes into better areas of resistance. That would continue that theme of a negative divergence, and that could eventually bring a nice short setup into play. So as day traders, it's important not to be caught up in a single direction. Understand which side is being dominant, but that doesn't mean that you can't trade the other side if in real time the market presents a situation where it makes sense to take the other side. So be flexible enough as a day trader to go long and short on the same day. That's one of the sources of edge as being a day trader, is that you have the ability to go long and short. You're not tied to one single direction. So use that to your advantage. And if the situation develops where it makes sense to aggressively short the market, if the other markets just completely all out fail, or there's just clear downside momentum, then that's okay, because right now the larger time frame bias is neutral to bullish. It's not extremely bullish. It's neutral to bullish. We're still trading in a larger balance after a pretty decent downside move, and now we reversed a decent amount. So there can be some balancing that takes place here. So that's the environment that we're currently trading in. That is the game plan for the day. Let's see if the buy side can maintain control off the open, and we'll take it from there.